Yo, hope everybody had a good day today. In this video, I want to review some trades that I took, along with recapping some trades that we took in the Discord. I'm going to go over some market context to better prepare some trades that we could take in the future, along with some very key psychology lessons that we could use as building blocks. Before we do get into the charts, if you want a very good trading resource, be sure to follow me on Instagram at InvestaTrade. I post daily trading recaps on here, along with very good trading tips and tricks. You're not going to find these anywhere else. It's a good resource, and you're definitely missing out if you're not following it. But now, without further ado, let's get right into the video. To get more context, let's go over the pre-market plan. I post these every single day in the Discord. The first one is on the NASDAQ or the QQQs. This is going to set the tone for the majority of the equities because it's a major market. We kept putting in lower highs and rejecting supply every time we come into the 5.4 to 8.0 area. Overnight, we were hitting supply. We rejected it. So if in the first hour, we don't slice above this 15054 or create demand above it, I won't be feeling bullish. We had some small demand zones below that if we reject supply and get below it, I think the downside on not only the market, but equities will follow as well. Now, one thing I do want to mention is in this market, if you play puts for a trend, you are going to get destroyed. In my opinion, puts are only good for scalps just because every dip we get has been getting bought up. So if you're looking to play puts, be sure to take profits fast and get an entry very fast as long as you respect your risk. So this is the supply zone at 15029 that we were watching. Immediately in the first 3 minutes, we did reject it and move lower. This was the 05 demand zone that we were watching out for. And if we sliced through any zone or base out below it or above or create new demand or supply, you have to look at it as an equation in the supply and demand for the market. If we slice through it, supply is going to exceed demand. Or if we slice above supply, demand is going to exceed that supply zone. So always understand the context backing it, understanding how volume affects price and how price affects volatility and momentum. My first trade on the QQQs were once we sliced through this 15005 zone, there was essentially nothing in between these zones. I normally do not like playing puts if we break below a demand zone, but if there's nothing supporting us, there's no demand lower, and the selling pressure is pretty heavy, as you can see by this volume, it's acceptable for me to play puts. So at 936, I'll show you what this looked like. Right here, as soon as we got below the 15,000 key level, it's a very important psychological number. It's a whole number. I played the 365 puts on the QQQs for Monday's expiration at 65 cents. It looked like this. We obviously didn't have that lower wick at the point. And at this point, my stop loss was above 15,020. Then the next candle, another very aggressive move down. I like to see volume like this. I was simply targeting this demand zone. And at 940, I sold my full position. We came into this zone, and because of how heavy selling pressure was, we rejected supply. We're putting in lower highs. The context was pretty bearish, although it's very hard to be bearish because we have so many demand zones lower that what's stopping price from bouncing? So in my opinion, if you're playing puts, you have to scalp it. Don't think that we're going to slice through every demand zone just yet. And we broke low a day, and I put myself in the mindset of a retail trader. A lot of retail traders will be chasing this extended 70-point move to the downside, especially below low a day. And if they don't know demand is here, let's just act like it's a naked chart without these imbalances drawn. We have some higher volume coming in, and I knew a majority would be hopping on puts, and I like selling into strength. And I got out my puts at 940 at 93 cents. It was a quick 4-minute trade, and I profited 43% on this. This continued to sell off. So this is a psychology tip. If you get in a trade and you don't sell at the bottom or you don't sell at the top, it's okay. No one's ever going to buy the bottom or sell the top. Respect your plan, respect your risk, and take profits when you do. I made 43% on this trade, but if I waited another 10 minutes, this would have been a 115% winner. You're never going to catch the bottom. Just understand where the market's trading at, understand how price is telling you its story. Take your profits and move on. You could always re-enter. You could always sit sidelined. Or you could always just wait for another best quality setup. So eventually we moved further into the zone. This did bounce off this demand zone on the first test. I did not take this trade because of the selling context that I mentioned earlier. But if you saw my post on Instagram yesterday, we did put a lower high inside of this demand zone. I know some members absolutely killed these calls above the 14975 area, targeting supply. But I did not take this trade because it's going to bring me into my AMD trade that I took at the same time that NQ was forming at this area. Now going to the pre-market plan on AMD yesterday, one thing I do want to mention is I definitely plan on live streaming my pre-market plans for the Investor Trade members in the Discord, and I will be adding a voice chat to the Discord. I'm going to try it out this week. But AMD, not the cleanest chart. We had a crazy rally the past couple of days, very strong volume. It's something you want to see for a stock that's breaking out. Chart's a little too obvious, so it really wasn't the highest quality of a setup for me. The more obvious and the more eyes that are watching it, the lower of the quality of the scale becomes for me. But I was speculating that demand will form if we complete the structure. If we get above the highs at 107, I may look to play calls. We also had demand at 104.91. So pulling up this AMD chart, just like NQ, right? This chart looks very identical to NQ. You can compare these. This sold off into this demand zone. I did not play this bounce just because NQ was slicing through demand at this point. It's very key for you to compare market to equities, because when the equities start bouncing, or when the market starts bouncing, you're going to have a quality setup on the equity. So NASDAQ was slicing through demand. This thing did hit demand and this thing did rally up. I did not take it off demand. Instead, we were watching this 107 key level and speculating that demand was going to form. Came back up, retested the demand zone over here, eventually went to assault this 107 area. And at 10:09, I got the 108 calls on AMD at $1.85. It looked like this. I liked this little flag above the highs. I liked that we bounced off demand. I liked that the opening price was acting as support in this area right here. So it was just like a lot of different factors aligning, and you all know me. When I get a bunch of different factors, I love to see it. It gives me more confirmation, gives me more conviction on the trade that I know it's going to work out and it's a higher quality one. So I got in right here at $1.85, anticipating and speculating that we were going to break 107 and form new demand at the 107 area. The next candle, volume started coming in. Very nice move on this. Eventually, we got another push up. And since we are at all-time highs, the only thing you could do is use my take profit strategy that I go over in the course. You could use whole numbers. You could use the market to look at it. You could use key levels, just as areas that you could target, especially if you're scalping. Very hard to get a target for a trend trade. But 108 was my target on this. I was really only anticipating a quick dollar move, and my stop was around 106. So it was about a 75-cent risk to make about $1.25. Not the best risk to reward. However, it was a quality setup. And sometimes I will take a little shittier of a risk to reward if the quality of the setup is a little higher and I have high conviction on this. So we started moving, and at 10:16, this candle right here, as soon as we broke above 108, I knew majority of the retail was going to be hopping on this trend late. They were going to get on the train at the last stop, thinking that this thing was going to keep going, especially above 108, volume to confirm it, and I got out my full position at $2.55. It was a 35% return. Again, if I held this thing, if I held, let's just say, a pullback, I could have got more, I could have squeezed more juice out of the lemon, but I'll never complain about following my plan and extracting profits from the market. Microsoft, another setup from Monday. I did not take this one, but I know members capitalized on it from the plan. We had an inverse head and shoulders at demand. Now, this was a very key demand zone at 284. If the market supports it, it could be a great setup to the upside in playing calls. If you were to look at Microsoft, this is why it's important to understand what the market's doing and its context. This chart is very identical. We sold off in the first 20 or so minutes, came into demand, and we made a lower high before bouncing, or a higher low before bouncing. Now, this was also a key demand zone because we came into it yesterday and buyers really didn't show any effort. So we want those same buyers to show the different amount of effort, greater effort in bringing this higher so they could get rewarded. And if the market supports it, we could take a high quality trade on it. This did have a nice bounce. Would have liked a little more continuation. And that brings me into Tuesday's action. Microsoft bounced off of that same demand zone from yesterday, but it was very weird going over ES and NQ on Tuesday, mixed signals, and I couldn't really read the context too well. And if it wasn't for that sudden rally, I don't think Microsoft would have bounced off of this demand zone. But every time we test it, buyers prove to be strong. It's a very key convincing sign in the auction of the market. But going to ES, let's just look at yesterday's action. We rejected this 4412.5 supply zone and sold all the way off into demand. This was also in the pre-market plan, just like NQ, where if we don't slice through that supply zone in the first hour, I'm not going to be bullish until we get demand lower. And you could have capitalized on puts after this little balancing out period right here, where we sold off into demand. But overnight, we came into the 7.25 zone. We rallied, and the market opened. And like I just said earlier, very strange action. Something was a little fishy. I was telling members in the intraday commentary tab that can't really read this too well. Something's a little fishy. I'm getting mixed signals. The market was aggressively selling off. We had this key 4372 demand zone. Let me pull up the pre-market plan just to get our levels. To the downside, demand at 4377 and 4372 that we must hold and buyers must defend at the zone. If we got below it, I would have been pretty bearish. Came into this level, the 7.7 zone found no bids. Came all the way to the end of this 7.2 zone where we bounced up. And then randomly, I still don't know if there was news on this, but aggressively sold, rally to the upside above 4,400 in the day into the 4,412 supply zone. And NQ also helped support this fishy little market. Very strange mixed signals. And one thing I do want to mention is when I get mixed signals like this, we're prone to force trades based off of our emotions and what we think is going to happen. So if you ever get mixed signals or you can't really read the story the market's telling you, I always say this, that the market's the storyteller, and it's our job as traders to comprehend the story it's trying to tell us. If we can't comprehend it and can't get the context clues to understand what it's trying to portray to us, it's best to just sit on our hands, wait for the market to get a little more development, to get more context, and then we could put a trade on. And if we can't read the market properly, we're going to force trades. I forced one QQQ call today after this demand zone. In my head, I had a constant dialogue saying, sit sidelined. I can't really read this too well. Let me wait for the market to really correspond with my edge. And I acted based off of impulse. I acted on emotions. And I took QQQ calls once we bounced off this demand zone and stopped out below low a day. I love trading like this because my risk is relatively smaller compared to all my wins and my rewards. So a small loss isn't going to affect me like this, but it's just the fact that I acted off of my emotions. That's what kills me the most, not the monetary value of the loss. But this supports the mixed signals aspect. I mean, we rejected supply, came into demand, then came into the 1500 key level, 15,000 key level and sold off. At this point, the S&P was selling off. Equities were mixed signals as well. So, I just really did not want to force anything. And eventually, this mixed signal, fishy action kind of got validated once we broke low a day. Heavy volume. It's a major stop hunt. And then boom, immediate reversal. Like I said, I don't know if it was news. Didn't do my research on it just yet. But this is how the market works. It knows where your stop losses are at. If you were long, let's just say here, they're going to break it below the low. You have people stopping out. You could validate that by that volume, stop hunt, and then immediate reaction. They need liquidity to get filled for the market to move. Big orders. This was definitely some type of manipulation here, no doubt in my mind. Eventually we rallied, obviously below this demand, so it becomes invalid, and then came into the supply imbalances above. But the point I want to leave you all off here with is if it's fishy, if it's mixed signals, you can't really read it too well, sit on your hands, be patient, and be disciplined enough to realize it. Do not force a trade, because if you force a trade, you're going to be acting on emotions, and any emotional decision in the market is going to be an irrational one, and I can guarantee you are going to lose unless you get very lucky. So that's the point I want to leave you all off at. Very good start to the 2 days. If you want to see everything, go to my Instagram story. Be sure to follow me on that. Drop a like on this video, and if you truly want to learn more, check out the links in the description below. I offer a very in-depth an educational course that will come with access to the Discord at no extra cost. Like I said earlier, I plan on adding a voice chat, and I may start doing pre-market live streams depending on if members want that or not. But besides that, I'm going to end it. Peace.